morning, investors, and welcome to your Stock Sense morning brief for Monday, November 10th, 2025. I'm Malik, and we're here to give you a concise rundown of what's moving the Pakistan Stock Exchange, what to watch out for today, and the broader economic landscape. Let's dive straight into the market action from the last trading session. The KSE-100 index showed a positive rebound, closing up by about 496 points at 159,590. This translates to a gain of 0.3%. This was a welcome change, especially when compared to the previous day, where the index had closed down about 480 points, losing 0.3% and settling just over 159,000. Market participation saw a significant jump, with total traded volume soaring to nearly 770 million shares, a substantial increase from the previous days around 286 million shares. The traded value for the main board also rose considerably, crossing over 30.7 billion rupees. Market breadth remained positive, with 228 advancers outnumbering 203 decliners, and 48 scrips remaining neutral. Looking at sector performance, two sectors really stood out. The Textile Composite sector saw a notable decline, impacting the market negatively, with a net change of over 14 billion rupees in its index value. On the flip side, the glass and ceramics sector showed strength, contributing positively to the market, with its index gaining nearly 60 million rupees. These movements highlight the selective nature of the market's upward swing. From a technical perspective, the KSE-100 is presenting a somewhat mixed picture. While most short-term moving averages are currently signaling sell, indicating some near-term bearish sentiment, the longer-term moving averages, like the 100-day and 200-day, still point towards a buy action, suggesting underlying long-term bullishness. For key levels, the classic pivot point sits around 162,650. Investors should watch the immediate resistance level near 169,000, while support can be found around 155,300. This indicates that while the market has seen some volatility, there are established levels that could define its short-term trajectory. On the corporate front, today, November 10th, marks an important day for several companies. We have board meetings scheduled for Jubilee General Insurance Limited, Mughal Iron and Steel Industries Limited, First Equity Madaraba, and Fauji Fertilizer Company Limited. These meetings are set to consider matters other than financial results, so keep an eye out for any strategic announcements. Crucially, today is also the last day of entitlement for Atlas Honda Limited's significant 460% distribution. If you're looking to be eligible for this, today is your final chance. Meanwhile, in macro developments, we've seen a mix of positive indicators and some concerning trends. On the positive side, Pakistan reported a budget surplus of 2.1 trillion rupees for the first quarter of fiscal year 2026, a strong sign of fiscal health. The tax-to-GDP ratio has also improved to just over 10% in 2024-25, largely driven by increased direct taxes and enhanced enforcement by the FBR. Furthermore, the blue economy is set for a boost, with MoUs worth 76 billion rupees inked for its development, including Pakistan's first green ship repair and recycling yard. In a major vote of confidence, Google has completed its registration and plans to open an office in Pakistan, signaling significant foreign direct investment and growth in the tech sector. The government is also pushing ahead with structural reforms, with major airports in Islamabad, Lahore, and Karachi now up for privatization, alongside progress on the PIA divestment. However, there are also clouds on the horizon. The proposed 27th constitutional amendment, particularly changes to the judicial structure, is creating significant political and institutional uncertainty, leading to concerns about judicial independence. This has already sparked a nationwide protest movement from the opposition, who are threatening to halt parliamentary proceedings until the amendment is withdrawn. Adding to the economic challenges, the industrial sector has outrightly rejected the Prime Minister's recent electricity package, demanding a reduction in the base tariff and raising concerns about discriminatory rates impacting competitiveness. We're also seeing subdued foreign bill discounting, with exporters holding on to dollars, anticipating a potential currency adjustment, which could signal a lack of confidence in the current exchange rate. Perhaps most concerning is the report that private investment in the manufacturing sector has halved over the last 6 years, a critical long-term negative that poses a serious threat to the country's economic growth trajectory. Turning to institutional flows, on November 7th, we observed foreign institutions as net sellers, offloading about $2.1 million from the market. However, local institutions stepped in as net buyers, acquiring roughly the same amount, balancing out the foreign outflow. Delving deeper, we saw significant net buying by local individuals who injected around $3.5 million, along with insurance companies and mutual funds also being net buyers. On the selling side, foreign corporates, banks, and broker proprietary trading desks were net sellers. My take is that the market is navigating a complex landscape. While the positive fiscal news, structural reforms, and significant foreign investment like Google's entry are certainly encouraging, the deep-seated issues of declining private investment, industrial sector challenges, and the escalating political uncertainty surrounding the judicial amendments are creating a cautious environment. The local investor participation, especially from individuals, is providing some support, but the foreign institutional selling, even if matched by local buying, reflects a degree of international concern. Investors should brace for continued volatility as the market weighs these conflicting signals, with political developments likely to play a significant role in near-term sentiment. That's all for your StockSense Morning Brief today. Thank you for tuning in. Remember to subscribe to StockSense for daily updates and insights. Until next time, trade smart, and we'll catch you tomorrow morning.